Holy smokes, everyone. You thought that the Evergrande crisis was over and all the risks are now off the table? Well, that is wrong. Very wrong. The contagion is only just begun. We're starting to see the Evergrande collapse spread throughout the whole Chinese real estate market. Other developers are dropping like flies. Risks are mounting up in the financial system, and it's looking like the whole real estate market in China could collapse. The world is going silent on this issue now as they think that the worst is over, but really this process is a slow process and it's only just beginning, and it's going to take us a while to start to see the results of all these defaults that are starting to happen right, left, front and center right now. So everyone, these are the topics I'm going to be going over in this video. It is very, very important right now, and I'm going to go over what this means for you and me and break it down in simple terms. Okay, everyone, let's not waste any time. Let's get straight into it. So quickly, for those of you that don't know, Evergrande is the second biggest developer in China, and it has over $300 billion in debt and liabilities and has missed 3 to 4 payments on its bonds so far, and it is only weeks away from officially defaulting. This all started when Chinese regulators set in something called the 3 red line rules, and if developers hit 1 or 3 of these red line rules, they would have their borrowing capacity reduced significantly, and Evergrande hit all 3. And what this has also showed is how much massive amounts of leverage is in the real estate market. And this has sent borrowing costs for developers skyrocketing all the way up to 16 and 17% if they want to issue these junk bonds, aka IOUs. But have a look at this, everybody. This is showing how bad this scenario in China could get. Because remember, China is the second biggest economy in the world. Their real estate market is worth over $50 trillion, and this is now starting to have effects on its $12 trillion credit mark. So as we can see here, people, China's financial system could collapse. This is according to the Reserve Bank of Australia as the Evergrande bombshell continues. And this isn't just going to affect Australia, this is going to affect the whole world and the whole financial system. Because what are we starting to see now, everybody? This. Other developers are now starting to default right, left, front and center. Shock default in China has investors eyeing repayment dates. So Fantasia failed to repay a $205 million bond as the sector is cooling. And there's a lot more payments due next week on October 15th. And I'll bring up a chart here, everybody. Look at these bonds. They're absolutely plummeting in value. They're going from 100 cents on the dollar all the way down to 20 cents on the dollar. So Chinese authorities have maintained strict rules on leverage, while measures to cool the housing market are dampening sales. Recent days have brought more examples of stress at other property firms, with Cynic Holdings Group Co. receiving a demand to repay some debt after missing 2 local interest payments. Strains were already building several months ago. Sunshine 100 Chinese Holding defaulted on dollar notes in August. And of course, the media tried to get comment from Fantasia, but they refused to comment. And this is really the pickle that China is in right now. Slow motion train wreck that is Evergrande, it remains a crucial aspect of those vulnerabilities. If you act too quickly in addressing these vulnerabilities, confidence in the implicit guarantees that underpin much of China's financial system could collapse, which would lead to financial distress. But in contrast, the real pickle they're in, if they act too slowly, the probability of a more severe financial stress in the future will increase. And again, this is how this whole situation began in the first place. There was too much leverage in the system in the Chinese real estate market. Regulators stepped in to cool the housing market, but maybe they bit off more they can chew, and we're really starting to see the real estate market get hammered hard right now. And if they bail them out, continued bailouts also risk further entrenching perceptions of implicit guarantees. Because like I've been saying, if they bail out Evergrande, well then all the other developers are going to want to get bailout as well. And if they do get bailouts, then they'll just take on more risk in the future, thinking that don't worry, the central bank will be there to save the day, adding more risk and leverage to the housing market and ultimately the financial stability of China's economy. So Chinese authorities have found themselves caught between a rock and a hard place on managing the wind-up of the world's second most indebted company, whose collapse will trigger wider stress in China's financial and real estate sectors. Financial markets still fear the futures of China's second largest property developer, while another global financial crisis has been considered a distinct possibility. Because look at this, everyone. It wasn't just Fantasia. Holders of Evergrande linked Jumbo Fortune Bond is still yet to be paid. And the next step would be requesting payment from Evergrande, and non-payment may trigger cross defaults on Evergrande's debt. So although Evergrande hasn't officially defaulted, people, I don't think there's a way they can't default eventually. So do you see what's happening, everyone? On a weekly basis, Evergrande is unable to pay its bills, and those bills are piling up. It points to the possibility that China's entire real estate sector is staring into the abyss. And so what also has happened this week is China's Evergrande shares have been halted, and it's been halted for over a week now after, their share price has already plummeted 84%. Over the past 5 days, it's been halted. They're saying there's going to be some major transaction, but still, this is just all talk. Nothing has materialized. And so what is this leading to? Well, they've had to sell properties at steep discounts. They've sold other assets, delayed payments to suppliers, holders of its wealth management products, and on some of its other liabilities, and sought to offer debt holders discounts on properties in lieu of payment. And if Evergrande has to do this, other developers also have to heavily discount their prices just to compete. Because look what's happening to the Chinese real estate market right now. Well, now we've got evidence and confirmation and data that the Chinese housing market is starting to collapse. So China developers' sales plunge as Evergrande crisis spreads. Because listen to this, everybody. September sales by top 100 firms are down 36% year on year. And the surprise bond defaults by Fantasia and other developers are adding to huge uncertainty in the housing market. So China Real Estate Information Corp said in a report, more than 90 developers saw a decline in their sales from a year ago, with 60% of them recording a drop of 30% or more. This is starting to have effect on China's stock market, especially for the real estate and property sectors. In the mainland stock market, an index tracking the shares of developers sank as much as 1.4%, while the Hang Seng Property Index in Hong Kong was down as much as 1.3%. And this also caused China's real estate bonds to plummet, to yields hitting as much as 16.9% Thursday, according to a Bloomberg index, and that debt fell as much as 2 cents on the dollar Friday morning, according to credit traders. So what that means in simple terms is people normally wanting to buy these bonds, aka buy this debt, and normally get paid a pretty high interest rate. They think that all these developers, could be insolvent, and they don't really want to invest any money at all. And this could cause yields to go over 20%, and then that just makes the problem worse because then these developers can't afford to pay these high interest rate yields. And listen to this, everyone. This is showing that real estate prices are starting to fall now. So domestic home sales by value already slumped 20% in August from a year earlier. This is according to official data, the biggest drop since the onset of the pandemic shut swathes of the economy at the start of last year. So what we've seen is the central bank try to pump in billions and billions of dollars in liquidity every day to try to lift confidence in the markets, because remember, a lot of markets is just confidence, not really fundamentals, and sometimes fear of a problem could actually cause more selling than the actual problem. And so what this is going to lead to is more and more developers are going to have to discount their properties to get sales. People have no confidence in lending money to Chinese developers, and also investors, if they think that they're not going to get any returns or their apartment is going to plummet 40% in value, they're not going to want to buy. And this is also going to affect the bank's books, because if they've got a lot of loans against these assets which become much worthless or drop 50% in value, well then that means the banking sector and the financial system is going to be hit very hard as well. Because look at this, everybody. All this that is happening right now, if it couldn't just get any worse, this is now spreading to China's $12 trillion local credit market. Because we'll have a look at this chart here, everybody. The stress levels for onshore bonds has rose from level 2 to level 3, but really the investors are going to get hit the hardest is the offshore investors. So the offshore credit stress was at level 6 in September, up from level 4 in August. So we're starting to see the offshore credit stress is pretty much as high as it can get. And on top of all of this, this is really leading to a perfect storm for an economic collapse in China. So we're starting to see China's energy crisis, where we've seen lots of shutdown and power outages. That's hitting everything from iPhones to milk. And this energy crisis and all the regulatory crackdowns that we're seeing in China is going to cause a lot of investors to rethink building or making their products in China, and they may start taking their factories out of China and investing in, say, Vietnam or India, etc. But everyone, what does this all mean for you and me in simple terms? What this means is that this situation with Evergrande, it's not over. And from once we get the news to the actual financial disaster starts, that could take months to years. Just like in 2008, we saw all the risks in 2007, but for example, the S&P 500, it didn't bottom until 2009. So while the markets may seem calm at the moment, this could just be the calm before the real storm, and we should be preparing ourselves for a potential financial crisis that could happen if the second biggest economy around the world falls into a deep recession or has their own domestic financial crisis. Because remember, markets these days, they're very globalized, and what happens in one country can affect another country. So what I'm thinking is, borrowing costs are going to continue to skyrocket for developers. They're not going to be able to afford the high interest rates. They're going to default. They're going to go bankrupt. They're going to have fire sales on a lot of these apartments. House prices in China is going to plummet. That's going to affect the bank's loan books. They're going to see lots of stress. And I think this will spill over into other economies and into the broader financial system, because there is a lot of offshore investors holding these bonds as well. So everyone, we're going to have to continue to monitor this situation, but don't worry, I'll keep you updated every step of the way. But everyone, that was just my thoughts and opinions on the situation. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.